In this video, I'm going to be discussing a zip red and a zip gray spike. Excuse me. And it may be that you heard me speak about when you have a zip red spike and zip gray is under zip red, that is a reversal pattern and it goes back up. And that idea is true. Turning over to the charts, I've got 3 daily charts. The one over here on the right, is all of them is the master platform chart with all of the subcharts. And then as other videos I've made show, the other 2 daily charts with indicators split up. The vertical pink lines identify the day that we have the red spike with the zip gray underneath the red spike. And as I said, this is a reversal pattern, and normally this goes back up, especially when you have a strong down movement like this. But I want to point out why this one did not go up the next day and show you the signs behind it. One of the key signs is that from back here, when, if you'll notice, Zip Zion went up and touched Zip Green at 100 on this day. Excuse me. And normally when that happens, it's a reversal pattern going down. Just like over here on this, where this line is, Zip Zion went down to 0, hit Zip Green, and immediately went back up the next day. Although the next day it didn't hold itself, we basically had 3 or 4 days of congestion. However, what I'm trying to point out is, as always, you need to look at the supporting evidence associated with the pattern that you're seeing. And in this case here, we have a significant pattern that started back here about 1, 2, 3, 4, 5 days before the pink vertical line. And that was Zip Zion is highest and going down, which inevitably always tells us that the price is going down. You had, on this day here, you obviously had one day where it shot back up, and that could have easily been seen if you're knowledgeable, and that is with your, you've got a pink bottom, low angle down pink bottom, followed or preceded by a zip red spike. And on this day right here, we have what is referred to as a red spike. And that's with red spiking down, zip red spiking down below 50, and the zip yellow spiking down above 50. That would normally indicate an uptrend, a next day up. But as we see and look at our indicators, we can get a feeling for what we're doing. And you can see, for example, down here how swing gray is real close to 0. It's not going up into a high peak, because swing gray is a deep cycle indicator. And so that's telling us that if you look at it, it's actually on a peak. It's on its way down. It's been going down for quite a while, telling us that we're heading into a downtrend. And while we're at it, the zip red and green don't tell us a lot here. They're 2 of the 7 short-term trend lines. Green is going up and red is going down, and they're above 0, and so they're kind of knocking each other out. On the power chart, however, green has just crossed under orange, which you know is the start of a downtrend. And so on this day of the downtrend, on this day that we looked at this pattern of the gray spike underneath the red spike, this is the same day that the power green crossed under the power orange. Looking over to the trend chart, you have the trend trio. All three are under zero, and trend red is significantly lower. Trend red on this day actually was at minus 26. And so the yellow, pink, and blue were just under zero, not by much. But logically, we can see our progression. If you're looking just in your price charts, you can see your high peak over here, and you can see you had some actually divergent situation here. The candles themselves were going up, and the price lines were peaking, having a tendency to go down. And so, and then when we get to this day right here, we had a peak, but this peak is lower than all the other peaks behind it. And so we actually have a big W, if you can see it, with the middle of the W in some congestion here, with the price going, with the trend of the price peaks going down, but the candles going up. And this is actually a type of divergence which we can see, and oftentimes, I personally am more of a I look at what's happening for the day and trade the day. Some people want to trade 4, 5, 10 days. And so there's different elements to look at depending on what how you're trading. But the trend trio, the power chart are 2 out of the 3 groups that tell us that things are going to go down after today. The biggest is the ZIP Zion is still highest, and that definitely tells us that the price is going to go down next day. Your power yellow is highest, and although power yellow isn't highest, it's highest right next to the ZIP Zion line, which really I've said it, possibly you've heard it on another video. The ZIP, when you have ZIP green or ZIP Zion in the way, you can discount them or treat them as though they're not there when you're looking at other indicators if the pattern suggests itself. And right after this day right here, we're except for tomorrow, we had a high ZIP yellow, and it was corresponding with a high power yellow. So, but just like on today, or here, like this day right here, you have yesterday you had a red spike, and today you have a pink spike behind it, and things happen similarly as in the patterns of red-green twin spikes or red-green twin peaks. A red-green twin spike is a red going down, and then 1 or 2 days later, the ZIP green comes down to it or under it most of the time, and that's a reaction of a next day up pattern. ZIP red and ZIP pink have similar types of associated activity. Remember, your ZIP pink is a price barometer, and so your 3 price lines, your ZIP pink and your swing Zion, are your 5 price barometers. When they go up, price goes up. When they go down, price goes down. And so it's important to just to keep focused on what you see, on what you analyze as you're identifying and looking at different trades. the three groups of the seven short-term trend lines definitely identify more power than a lot of other things do. The design of them creates that increased influence, and so we always look at those first. And so what would normally be considered an uptrend next day is by some can easily be seen as a continuation of a downtrend if you just examine the indicators. And the other thing too, let me point out, it might be a little bit more visible over here on the power chart. Think of the proximity group indicators. That's the blue, pink, and the white and the yellow. When we have gap ups in the proximity group or significantly price higher movements, we see the four located above the power orange, and they end up going up. All four of those lines, and even now your red is significantly lower. It's down at 6, and that's the very bottom right here. But the proximity group 4 major lines, even along with yellow, power yellow, they are all under your orange and green power lines. And so from the perspective of a proximity group going down, this is a very understandable condition that we see. And in fact, this will, as a group of lines, keep them together, keep them observed as a group. Just like over here, when you see your proximity, your 4 lines in your proximity group starting to cross over your your power orange and green lines. That's enough for this video. I hope you understood what I said. I hope it wasn't confusing. I definitely believe in this system. If you will simply spend time analyzing what the indicators are telling you, you can see what's happening in the marketplace, and you can create winning situations a high percentage of time. Because remember, we trade only high probability positions, and in the three step formula, you have the patterns, conditions, and the signals. You got a pattern, that's great. We see patterns all the time, and we've picked out 20-some patterns that go up and 20-some patterns that go down. But you have to have the appropriate conditions which identify a proper directional movement for the pattern that you have. And obviously in this case, we did not have supporting conditions that would support the move up that we saw in the red spike down with the gray spike underneath the red spike. The videos, what you can't do in so much in written form is identify which indicator patterns have more power. And the Zip Zion indicator has a lot of power, because remember, your Zip Green is tracking your buyers in and out of the market. And Zip Zion, I say, is the grandfather of Zip Green. It tracks buyers in and out of the market as well, but the power that it takes is much more harder to move. And so what do you have here in this example? We have a condition where all the other indicators are underneath the ZIP Zion line, which is logical. And so that information, and it's logical because you have sensitive indicators that are reacting to what's happening in the market. That's why it's logical. So lots of information here. I hope it was a video that you can see what's happening and understand how the indicators reflect the market forces that we see. And way ahead of, I mean, in this case, we see it, we obviously watch it every day, but we've been watching ZIP Zion go down for days. So some really good examples here. Thanks for listening, and have fun trading. If you're not having fun trading, it's not something that you're going to be successful at, and it's not something that you should do. I sold real estate for 20 years, developed real estate for 20 years, and that was exciting. And this business is exciting. It's absolutely amazing what you can see.